position. Yeah, I probably should have recorded that little rant, but either way, I'm re-recording now. So, like I said, we'll hop straight into it. But again, do the little things this week, guys. Hop in that journal, be patient with your selection, be selective with your process, and let's crush it this week. All right. So we're gonna start off with gold. All right. So gold, crazy. I know Penthouse. I know you caught this sale, so shout out to you, man. I actually had it marked up, and I turned my head away for a moment. Ended up missing the exact entry at the top. Caught a couple shorts on the way, but overall, that was a beautiful setup, especially considering that the market was consolidating, right? And that's the one thing I want you guys to realize about the Hezi crossover in general, is regardless if the market is trending, regardless if the market is consolidating, we still are looking for the same pattern because that's going to tell you when the market is really going to move, right? So, you see here, even in the midst of consolidation, you have a Hezi crossover here, right? Hesitation crossover, take out the Hezi. You have one here for the buy. You have one here for the sell. Hesitation off demand, crossover, push back into the Hezi, into supply, then we sell again. There's another one here. There's another one here, right? And then the one that came from here, and this was just a re-entry originating from this supply zone up here. So you see, again, a lot of people will see the market moving in this way and they'll just, ignore any opportunities that's there or not even look for them because they believe the market is consolidating, going sideways, right? But even in consolidation, there's opportunity. You may just have to go down to a lower time frame in order to see that opportunity. So obviously the market had gave a massive push to the downside. I wasn't even expecting this much bearishness, to be quite honest. But now that we down here, it's like, what do we do with this information? Market dropped almost 2,000 pips. All right. So now that we're down here, once we have these exponential moves, I like to, go to the higher time frame and see if there's anything over to the left that I can use as a vantage point. All right. Anything that interests me. And I'm looking at this low right now. All right. And this low kind of has me interested just primarily because there's not a lot of volume within that low. Whenever I look at a low, I'm looking for very large candles. I'm looking for, a clear Hezi crossover, clear area of demand that I can, draw my demand zone from, right? And we may be able to use this one, right? However, I feel like I've seen this enough times where when you have a lot of these small candles reacting from a low, typically this low gets attacked, all right? And that's just what I've noticed over time, right? The size of the candles are, very important to whether or not that low is going to hold its weight or not. All right. So with that being said, I do see the potential for the market to push lower, right? Computer lagging a little bit, so just bear with me, y'all. Think it might be my Wi-Fi, I don't know. All right. So here you see we got this reaction and the market seems to be, struggling to push lower than this point, right? We got a reaction here, slight overshoot, reaction, reaction. Now, I feel like the easy thing to do is to say, look, we got a head and shoulders pattern. The market's going to buy up. That's the easy thing to do. But when we look at these lows to the left, you got to ask yourself, do you really think that these lows can really cause the market to go back to the upside and swing back to the upside? I personally don't think so, right? If I don't have that much confidence in the lows, what I do is I target the lows, all right? So with that being said, I believe we'll come attack these lows. 4,500 is where I'm looking for the market to go. All right, 4,500 price level. All right. Also here, we don't have a clear hezzy crossover. We don't have a, clear strong low either. So when I look at these lows, I think they're kind of suspect, right? Now, obviously, a lot of people will look at this as a strong low, and that's a fair assessment, all right? However, I'm talking about where the market is currently, right? I don't look at that as a strong low. So even though the market is reacting, I do think it can give a reaction. I'm just not 100% sold on the long-term buys, all right? When I look to the left, I also see the market clearing highs and making new lows while the market respects areas of supply. All right. So we clear highs, make a new low, then the market comes up, clears out internal liquidity. You see, we got a high here, high here, high here, high here. This is internal liquidity, and then the market pushes up into it and respects. As it respects, we also get another strong high where the market pushes lower. If I come down to the 1 minute time frame here, see here, we do have a hesitation off of demand. Market comes and clears out that hesitation. It runs back into this supply zone before it starts pushing down again. So now the question is can this high hold? And if it does, where can we get an opportunity from? All right. So the market does run into this area and then cross over bearish. All right. So if this happens to be a hezi, and then this happens to be a crossover just from here to here, the market can likely come and clear this out here. It's not the biggest footprint I've ever seen, but we do have, two pretty decent sized bearish candles right there, right? So we may be able to use that bearish footprint right here as an area of supply moving forward. Okay. You see here it does look a little better, all right? So again, not the best one in the world, but again, we try to look at this from a conceptual standpoint. We don't like to look at these things with emotions, right? So this is a low that led to a new high, which means that this is a demand zone, all right? The market pushes down, interacts, makes a high, makes a new low. We want to come clear that high out and then push back down towards this low, and ultimately this low, and push down into 4,500. Okay. So I would be looking at shorts above 45.55, and I would be targeting 4,500. Okay. So 45.55, and we targeting 4,500. Okay. Once the market gets down here, I feel like this is where we can really start looking for buy reactions. It's underneath these lows, right? A lot of people are looking to buy right now, which is why I believe we'll keep selling. Because here's a little rule of thumb when it comes to trading. If everybody sees something, you probably should do the opposite. But why? Because trading is an industry where most people fail. So the easy thing, I want you to when the next time you go on your charts, I want you to look at what's the easy thing to see, and then see what are other people probably looking for, right? Everybody is trading supply and demand these days, right? I don't think a lot of people trade break and retest as much as they used to, at least. I don't really see trend lines like that no more. I don't see but now supply and demand is the thing right now, right? So when everybody looks at supply and demand, what they do is they just take a low that makes a big move, and then they try to buy again when that low gets hit, like an order block or whatever, right? And that's why I feel like this low is very suspect. When I look at the body language of these candlesticks, they don't tell me that there's strength there, right? So I always look at the candlesticks as a thing that tells me what the future holds, right? I don't see a lot of strength in those candles. So with that being said, I feel like, that low is going to be a future target. Okay. So again, what is everybody seeing and what should we probably do as a result of that is the opposite. Okay. 90% of traders lose, if not more. So we don't want to necessarily do what everybody is doing. All right. We kind of want to find a way to do the opposite. With logic, of course, with risk to reward, with edge. We still want to have our technique. We don't just want to do random things, but that's still something that you should probably do whenever you get on the charts. All right. Check the chat real quick. Yeah, I don't trust this low. I don't trust this low. It's like it's still it's yeah, it got the resemblance of a strong low, but the fact we don't get that clear crossover and it's still respecting supply. All right, you still see supply intact. So like I haven't gotten that clear crossover to tell me that that low is strong, right? So the concept is strong low, heavy crossover, right? We got strong low, but do we get a heavy crossover? Not really. So with that being said, that is, you know, my analysis there. All right. Let's take a look at NASDAQ. All right.
Hey, Cam had a good question. The chat.
Why wouldn't it take out the highs to the left first? Okay, let's take a look at it. I didn't even see that. Which highs are you referring to specifically? You talking about these?
Yeah.
Well, because it's order flow, right? So I'm seeing supply remain intact throughout this whole process, right? So we look here, strong high, hesitation, crossover, take it out. So that's supply intact. Right here, we got a hesitation, crossover, push back up, supply is intact. Here, hesitation, crossover in reference to that time frame. Now it's like I'm just going with the order flow until these lows go. Now I do see that these lows aren't, or these, excuse me, not these lows, but these highs don't look very promising, but that's okay because I'm anticipating a buy in the future anyway, right? So, for example, the market at times it'll create liquidity while it's targeting another area of liquidity. So this, let's see how we could draw it. This is probably a little better, right? So this is looking weak, right? This looks like it can be, targeted at any point. And I agree, right? I do believe that this will become a target, but not before we target this, right? Once we target that, then this target will be on my mind. So again, sometimes what'll happen is the
Is there
market,
such thing as a weak low that that holds up?
yeah, it just depends on where the target is, right? Or it depends on what's going on the higher time frames. Because I can get something like this. And let me just finish this thought real quick, right? So these highs here appear to be weak, but maybe there's a target over here that we need to come hit first. Maybe there's a target over here that we need to come hit, and then this target will be hit, right? So you can't always have strong highs and strong lows everywhere. Sometimes they're going to create this in order to set up for the future move, right? So I see it, I see what you see, but at the end of the day, I still got Hezi crossovers forming, which is keeping the order flow intact. And then once I take the lows, this will be the target now, right? So it's just about timing, timing of it all. Now, um, there's something else. Strong, weak lows that hold. So yeah, you can get a weak low that hold. It might look like something like this, right? You might get, a Hezi crossover and then a weak low, and they'll just hold, but for how long? It'll hold until the Hezi get taken out, and then the target will be hit. So that's what I mean when I say sometimes weak highs and weak lows hold long enough for a certain area to be hit, and then it'll reverse. And now this is the target, this is the target, right? So it's just about timing of it all. So this is why, again, both people can be right and wrong. Like somebody might be bullish on this, somebody might be bearish on this. Both people can be right. It just depends on which setup you actually looking for. So this is why I got this here. Um, all right, so you'll get like a strong sweep, Hezi crossover, right? And then the market will be bearish, right? And sometimes you'll actually leave weak highs. Like this is pretty much the area that we in right here, right? Market is still going lower. So it's leaving weak highs right here, right? I see that, but I still got a little lower that I need to go. Right here, it's an internal range liquidity. On gold, it's just a low that I don't trust, right? So I have it marked up as a trap. Like I don't look at this as a strong low. Like it just has characteristics of of a trap in my opinion. Like you just kind of see it over the years. But yeah, it's weak for now, but it'll be a future target once a real strong low is established. Once we get a real strong low like that, boom, and then this low is stronger than this one, then we're gonna start targeting all the weak highs above it, right? We got a weak high up here, we'll target that. You got some suspect highs up here, you target that, like that's just how the game go. So it really just depends on the time frame, you know what I mean? Like on the 1 minute, I could see this. If I was on the 30 minute or the hour chart, I probably wouldn't even see those Hezi crossovers. So it's really just time frame and what the move you're looking for at that moment. But take a look at Nas, all right? Take a look at Nas. Got a beautiful buy down here. Definitely was happy about that. That played out. I had this I wanted this sale earlier in the week. Ended up missing it as it hit in the middle of the night. And when the market opened, it just wasn't really ready. So, we was patient. I actually took a jab in here, lost the first attempt, got it back on the second. So that just shows you, man, you're not gonna always be 100% from the field. You know what I mean? Like it's okay if your win rate ain't that high. You gotta make sure your risk to reward outweighs, the little losses that you're gonna take. So we took a little jab in here. It was a little bit too early. Noticed, the Hezi crossover here. Market hesitated off of supply. One reaction, low. Second reaction, took the low. So I knew that this low would probably be strong. Once the market reacted off of it, took the higher low entry right there, targeted the highs, right? So this is another example to your question, Cam. It's like, why did these highs not get taken before the market dropped right here, right? And it's because they became a future target once the buys are ready, right? So you have to leave weak highs behind in order for the market to get the target liquidity for the next push to the upside, right? Like if it's a strong high and it's a strong low, it's like where can the market go? We got a strong high and we got a strong low. Like it's gonna be hard for the market to target these highs if they're already strong. So you have to leave weak highs behind, and then you get that low you're supposed to get, and now you have something to actually target. You know what I'm saying? So that's that. Beautiful buy there. That's probably the best trade of the week for me. We actually took this sell here, and that wasn't even the right move, right? As you guys can see. But this was still a 1-to-6 trade, right? So even at a partial profit, that's still 1-to-3 risk to reward at least, because when you partial out, you should probably take at least 50%. So when we took that trade, that was a 1-to-6, and we partialed out of it right before the market reversed. And I say that to say this, like obviously, it probably would have been better to just take a buy. It would have been better to even take this buy. I hesitated on that one because, the market opened up right here. I like to see the market push lower or higher after the open before I take a trade. So it just opened up and it flew. I don't like taking trades like that personally. So as you guys can see, the buy was clearly the bigger move, right? But one thing you got to realize about trading is it's not always about catching the biggest move, it's about catching the move you can duplicate day in and day out. So if I'm used to the market opening up after 9:30 Eastern time and either taking out some highs and then dropping, or I'm used to the market either opening up, taking out some lows and then going up, I don't want to just wake up at 9:30 and just take a random buy, right? Because this buy is dangerous because it never came back for the liquidity that was here. That's a dangerous buy at times, especially with Nas, right? There's other times where you could take trades like this, like even on gold. I'm technically taking a trade on the sales that technically didn't take the liquidity first because it looks like this. But at least I got a hezzy crossover. At least I got lower time frame context. And it's making strong highs on the lower time frame too. So that's a little bit different than Nas, which I specifically wait for a time-based trade. So this is why I wanted to wait for some type of highs to get cleared out first. These highs, these highs. I saw the hezzy crossover over here. I saw area of supply. So we took our sales here, right? Now, I'd rather get this sale and know why it happened exactly and know that I can catch it almost every day before I take a big buy that I could lose any given time, right? Because the market could have easily just ran more lower and then went up. So when you're trading, guys, again, you want to catch the predictable move, right? The move that's easy to, that you check off your confirmation checklist and, you're satisfied with, the confirmations being met, the requirements that need to be met to actually take that position. Because guys, there's been days the market done had crazy moves. And I was like, oh, I should have took that. But then you got to think like, if you took that, would you know exactly why the market did what it did? And if you can't answer that, then you shouldn't have took that trade, right? So as you can see, the market pushed up, made new highs, and then just dropped later in the day, right? So it started dropping at what's that, like 7:30, 7 p.m. So, it was just one of those days where market didn't move like I wanted it to when I was on the charts. But again, we still got that sell. So now the question is, what's going to happen now? All right. What's going to happen now? I'll be honest, stock market has been booming, right? And over the past month or so, I actually been wrong because I figured higher gas prices and the conflict in the Middle East not being solved would cause a lot of bearishness. But what we're seeing now is our stock market is more tech driven than ever before. So regardless of inflation, regardless of beef prices being high, regardless of gas prices being high, regardless of consumer goods being high, right? What we're starting to notice now is that the correlation of tech-based stocks being so powerful is overpowering the negative news or for the common American, right? So like if you're, if you're Nvidia, if you're Google, if you're Micron, if you're all these type of tech companies, I mean, you're happy, right? But if you're just a normal American that's trying to get good prices for stuff, you're pissed, right? So now the stock market is a little different than what we kind of been accustomed to. And I said this last week, even Warren Buffett admitted, right? And we're talking one of the best investors of all time, if not the best investor. Even he was like, it's almost like gambling now. And I don't believe it's gambling specifically, but if you come from that era where 1 + 1 = 2, then yeah, right now trading does feel like gambling because 1 + 1 doesn't equal 2 anymore. Now it's really just about, again, risk to reward, knowing that you're going to be right, right? Not every time, but you're going to be right enough. You feel what I'm saying? So again, it's really about picking your spots, right? Where you have a small window for a reaction, but you have a large profit potential. And that's all I really do. I'm only looking to take trades in specific areas that make sense, right? Like this, for example, we got these lows. Lows get taken out. This is an area that makes sense to look for trades, right? And I know there's a lot of upside potential. So now I can keep my reaction area small, right? What I'm willing to lose can be small, but what I'm willing to gain can be large, right? We looked at this breaker block about what last week, week before. This was the same thing. We took out the internal liquidity. Now it's like, okay, the buys are likely. So now let's go ahead and approach buys. So it's just about timing and risk to reward. That's really what it's about. And this is, truth be told, guys, y'all know me. I'm not a fundamental guy. I hate fundamental analysis. I think everybody that talks about fundamentals too much, I feel like, no disrespect, like, but I feel like people try to make themselves sound smart, right? At the end of the day, trading is about gathering data with an edge that's in your favor. And the edge is risk to reward. That's all it is. Everybody that kind of gets on here like, oh, well, CPI said this, so this is what's going to happen. No, no, you don't know. You don't know. If you go back in time and you look at every positive news release and you see what happened to the US dollar, you see what happened to the stock market, it's not really a clear correlation. And if it was, everybody be rich. If it was that simple, everybody would just wait for the news release and just buy if it was positive, sell if it was negative. Buy if it's positive, sell if it's negative. It would be that simple, right? But is it that simple? Let's be honest. Is it that simple? And if it is, why isn't everybody rich? So at the end of the day, we got to understand the markets move off of liquidity. They don't move off of news alerts. It moves off liquidity. That's it. So when I know that, I can be specific about where I'm willing to take a trade. For example, this would be a good area to take a trade because it's above an old high, right? And what's above old high? Liquidity. So we take out the liquidity. I look to the left. I see a bearish footprint. That's where you take the trade, plain and simple. Like, and then you look at it from the perspective of, okay, I want the reaction to be small, but I want the target to be big. 1 to 6 risk to reward. I can lose 5 times, win once, and make money. That's how you make money trading, right? You got to be able to say, even if I lost this trade 5 times in a row, can I win once and still make money? And that's where the law of averages comes and saves you. Because even the best trader is going to lose a couple times, and the worst trader is going to win a couple times. This is why I can give my phone to my daughter who doesn't even know what trading is, and I could tell her push the red button or press the blue button, and she might win a trade, right? Doesn't mean she knows what she's doing, but it just means that the markets produce random outcomes sometimes, right? A lot of times. So this is why you just got to be very specific about where you're actually gonna risk your money, and is there a big enough reward to justify that risk? That's literally all trading is, right? So, like, I don't get too deep into all the other stuff, right? But stocks and stuff like that, again, that's a slightly difference because obviously there's information backing that, like data center stocks and memory stocks and stuff like that. I just really mean the overall stock market and why the fundamental releases are not driving the markets the way we think. Because inflation got higher, and so did the market. You know what I mean? It doesn't make sense compared to the market we grew up with. So that's why I'm saying you have to make adjustments. I talked about this on, on my page. A few weeks ago, I made a post. It was probably about a month ago. I made a post on my page, a reel. It was just talking about the reason why people are getting destroyed in the markets today is because they think what worked in 2020 is going to work today. And you have to constantly be not necessarily tweaking or not changing your strategy, but sometimes you got to tweak it, right? Sometimes you have to make necessary adjustments in your philosophy. But so far as what we see Nasdaq doing, um, I believe same with gold, right? I think we're gonna go make a new low because I can come down to the 1 minute and I could see this being a potential strong low, right? We all see that. We all see the lows here, okay? Market looked like it may have made a strong low and it's pushing up. But that move already happened, right? You see the strong low. We got the hezi right there. Strong low, hezi crossover. Come take out the low of the hezi. And now the market had that bullish push to the upside. That bullish push to the upside came and cleared out previous highs. So that move is over. That move is over. And that strong low is now irrelevant. It fulfilled its purpose. So now it's liquidity, right? So again, let's draw it out. Sometimes you're going to get a strong low in a lower time frame, 1 minute time frame, and then it plays out, right? It plays out. But once it's done, now it's time to come target that. You see what I'm saying? So this is why, again, time frames like can help, all right, with you understanding this. If I come to, say, the 1 hour chart and I can't even really tell it's a strong low, it's probably just a lower time frame move. Now, this is okay with me because I trade on a 1 minute anyway, but it's still good to know. You know what I'm saying? I don't care if it's a 1 minute or not. I'm gonna still take it. But it's important to realize that these lower time frame setups aren't gonna last forever. This is not meant to be a strong low that lasts forever. It's just meant to give you this move here. And that's fine. Nothing wrong with that, right? That's good money right there. That's good money. Take it here. Decent reaction. You can get a 1 to 8, 1 to 10, whatever, based off your stop loss. So that's cool. Cool, no problem. But now that we came and took out the money here, now we got to come back for them lows. So what I see is the market probably opening up. We'll probably respect this gap here and just start falling some more, right? As we start falling some more, come out a little bit, see if there's anything to the left that's a bit attractive, right? If I look over to the left, what is attractive for me to possibly catch a buy? I would say underneath this low right here. We get underneath 28,972, 970, just to give you a round number. 28,970, I'd be looking for the potential for some buys because this is a sharp push to the downside. This is called a V reaction, right? Sometimes you get just a clear, strong low. There's other times where you get like a deep V, like a deep V type reaction. That can definitely be an area where we look at. Now, there also is a little indecision candle right there. If that turns out to be a hezi, we could even go a little bit lower. I'm just letting you know, like, I'm not even anticipating any buy possibilities until this low gets taken out here, right? Best case scenario, we come for this little pocket, that little candle right there, because there's going to be internal liquidity underneath this candle as well. So that's a better case scenario. I say 28,860 and below. I'd probably be looking for a buy on Nas. All right, so that's that. All right, and obviously, as long as you know, I know Trump has already been a bit unhinged, but long as he don't push the damn red button, market should probably keep trending to the upside based on what we're seeing, right? I don't see a bubble bursting. I don't see too much escalation in the Middle East at this particular moment, but you never know, man. I don't think we had one full week of peace since, since he done got in there. So, you can't even, anticipate too much quietness for too long. Like it's kind of like, if you got kids and it's just been real quiet for too long, like, okay, let me go check on it. Something crazy might happen. Like you just expect something, to happen. It's kind of like that's how I feel with Trump right now. It's like, all right, we had a half decent week. So now it's time to fuck some shit up. Excuse my language. So he been a little too quiet last week. He went to China, said he had a good meeting, but now he probably gonna wake up pissed off. And
Hey, you said something about about Trump being China was cooking Trump or something like that.
I mean, they just told him to
What
his
was
face
happening?
it's a declining, we're a declining nation. They just and we should probably find a way to work together instead of being enemies. So China is like pretty much offering him an olive branch, but knowing Trump, he's probably not intelligent enough to understand that. But we left with no concessions. That's the other thing. So it's like you don't travel to China with all the top billionaires in America just to sit down and have a meeting, with no progress being made. So, he was in a he did an interview. They asked him, what did you get out of the meeting and what concessions did you leave with? And they said, just a relationship, and that's very important. But it's like there's no trade deals. There's no, he thought that China was gonna buy like 500 Boeing jets from us, and that would be like a good deal for us to make money and all of that. Like, but like all that stuff didn't end up happening. So essentially, he just went out there, and President Xi told him like to his face, literally. I mean, obviously there's a translator, but he told him America's a failing nation, and we should probably work together instead of being adversaries. Because China, the thing that people got to realize about China, the reason why there's a new world order and the reason why China is going to take over is because China does good business. The business model for America is to divide and conquer and also to use military power if necessary. That is the playbook. Like put sanctions on countries, make countries poor economically, that then the people uprise against their government because the people don't know why the country is poor. It's like Cuba. We put sanctions on Cuba. We put sanctions on Iran. We put sanctions on this country, that country, Venezuela, right? Everybody's talking about Maduro is this, Maduro is that. But people don't even know. We put sanctions on Venezuela. So it's like our plan is to destroy a country from within and then move in and seem like the people that's helping them. And then we end up taking their resources. It's the same thing happened with Libya. Everybody was celebrating when Gaddafi got killed, thinking that America was going to turn Libya around. But if you look at Libya in the 80s compared to it now, they was much better under Gaddafi. So, and this is why also every country we got beef with has natural resources that we want. You realize it's never just a normal country that America messing with. It's always a country that got oil. And Trump is the first president that's stupid enough to not talk about propaganda, right? Because I'm not saying he's the only person guilty of doing this. Everybody's done it from Bush to Obama to Biden. Like this is the American blueprint, right? However, Trump is the first president that just comes out and says, "Yeah, they got a lot of oil. Maybe we'll take it. Maybe we'll sell it." Like you're not supposed to say that, right? And this is why the Dave Chappelle skit was so popular because it was like, remember when Dave Chappelle was the president, and it was like, "Oh, why are you in the country?" It's like that. Oh, oil. Like he started coughing when he said oil. Like somebody said oil, he started coughing, like trying to Oh, ain't nobody say oil. Like, you know what I'm saying? Like it was meant to be funny because it's like you ain't supposed to say that out loud. You feel me? But Trump is the first president that we've ever seen that just comes out and says, like, yeah, we're gonna take their shit. Like, and it's absolutely diabolical. But now what countries are gonna start realizing, especially if we get out of NATO, it's wraps because now every European country is going to start doing business with China because China's approach is, yeah, we want your natural resources, but guess what? We're going to build up your country as well. This is why Africa has a lot of the top growing countries right now. Rwanda went from being a war zone back when America was messing with them. Now, Rwanda has internet in 95% of their homes. They have new roads. Ethiopia, new roads, new homes. Like, you know what I'm saying? So China does the same thing in terms of taking resources, but there's still a reciprocal benefit. So again, long story short, to answer your question, America went out there, they left with nothing because now China knows they have leverage. And if you see the tone that Trump had before flying out there compared to afterwards, it was like we can't keep allowing them to rape our economy. Da da da. He was talking rah rah, but when he went out there and came back, you see his tone was very different. He was like very docile. You know what I'm saying? And that means they dog walked his ass. You could tell in the body language, right? So because if anything, if Trump went out there and really got a victory, he gonna be the first to let you know. Right. We went out there, we got a new tariff deal, we got a new trade. He ain't say none of that. He said, yeah, we just had a really good conversation and we built on our relationship. That's what he told Sean Hannity. So that means he got cooked, long story short. But yeah, I mean, you just gotta be able to read through the BS. These politicians all be lying. So you gotta like really understand like what's being done and what's truly being said. But yeah, I gave y'all the play for Nas, play for gold. So far as like Euro USD, I don't really see much at the moment. I would love to see a buy come, you know, fill in some of this empty space. But if that does happen, we'll have time to catch it, right? We have what could be a breaker block right here, and we saw this on Nas a few weeks ago. And the reason why I don't like breaker blocks though is because sometimes they respect perfectly, sometimes they overshoot, right? So sometimes you'll get that bounce just like that. Sometimes the market will go lower and just end up closing back in this area, then it'll go up. I'm not a huge fan of breaker blocks, I'll be honest. However, we do have a large footprint right here, right? To the left, you see it, large footprint. The market goes sideways and then it goes higher. So conceptually, this can be a hezzy crossover, right? And then we got the footprint underneath the hezzy. So technically, the market can react from there, right? So I would just keep an eye on Euro USD. I do think the market will probably go a little bit lower to start. I don't think that this is quite enough. So I look for the market to go a little bit lower just for starters. And once the buy is ready, I think we'll know. All right. I don't think that this is ready just yet. I think we'll run the lows, right? Probably push down here a little bit. And then as we start to establish ourselves around, 1600, like 1.16, once we get into this area, that's where I'm gonna start looking for some long opportunity. All right. Same thing on GU. All right. Same thing on GU. They're gonna probably move pretty similar. All right. And yeah, that's about it, man. That's about it. So far as all the other currencies, I kind of just look at them day by day. But this is my primary watch list. Gold, Nas, GU, EU. So all the other ones, if we get a move, we get a move. I just kind of check them day by day. But for the sake of time, I'm not gonna go over every single currency right now. It's about keeping it lean, keeping it clean, man. You don't want to think about too much going into the week. Give yourself a few solid setups with good risk to reward, and that's all you need to live, honestly. It's not about catching 1,000 trades, right? But comments, questions, concerns, family. Comments, questions, concerns. If you guys found this, call beneficial or helpful, do me a favor. Give your boy a follow on Instagram. I'm dropping more content. I'm just doing a little more online. I'll get a lot of game behind the scenes, but I know I gotta be more visible. So that's what I'm looking to do now. So if you found this call beneficial, just do me a favor. You can pay me back with a like and follow on my Instagram. But if y'all got any comments, questions, or concerns before we wrap it up, anything confusing y'all, anything you need help with, anything I went over,
Nah, quick question. I just want to know, would you be able to upload this before you leave out to shoot to, you know what I mean? Because I
yeah,
jumped on late.
yeah, I got you, bro. I got you. Not a
All
problem.
right, well.
Already. Anybody else? Anybody else? And one more thing, guys. I do still have a trial for Trade Genius. All right. But I'm gonna be honest, the trial is gonna be over, all right, in like the next 24 hours, right? I've had it going for a minute, but I'm probably gonna take it down here shortly. So if you guys do want access to Trade Genius, where we could trade with me live and also, take you get access to my course, which has about, I'd say, what we got, y'all, like 50 hours of content, something like that. And I still got to add some more. That's the other thing. I still got to add to the course. But if you guys want access to this course, you can get the entire Hezi crossover, right here for you, right? Because I know a lot of times it's hard to grasp it on a free session, right? That I'll do on Sunday. But look, we got 54 hours of content and it's still growing. I still got more videos I need to drop for case studies. I always do new case studies so you guys can see the concepts evolve with new trade setups, right? So, if you guys want access to that as well as being able to trade with me live, I got my boot camp in here. We got mindset calls in here. We got all types of stuff in here, right? By the time you go through that, I mean, you will be a trading genius, right? And also Discord access where people getting payouts, they're getting funded, they're making withdrawals. We doing our thing, man. So if you want that, let me know, and we'll turn up. All right. But other than that, man, I do appreciate y'all for y'all time, and I'll catch y'all next week for the free session, Trade Genius. I'll see y'all this week for New York session. All right. Much love, man. I'll holler at y'all. Peace.